Welcome to the Deep Dive. Today we're jumping into the recent Q1 2025 earnings call from Omeros Corporation. Our goal here, as always, is to really cut through the noise, pull out the key financial bits, the pipeline news, the strategy shifts, basically help you quickly understand what actually matters. Just quick background, Omeros is in Biopharma, focused on, complement-mediated diseases and also oncology.
That's right. And probably the best place to start is just with the numbers they put out for the quarter.
Okay, let's do it. So for Q1, they reported a net loss of $33.5 million. That works out to 0.88 cents per share.
Right. And that's a little up from the previous quarter, Q4 2024. That was $31.4 million or 0.54 per share.
Okay. And cash.
Right.
Where did they land on cash?
As of the end of March 31st, they had $52.5 million in cash and investments on the books.
Right. So those are the headline figures.
Yeah, the snapshot.
But really the main story, I think, the thing they spent a lot of time on was shoring up the balance sheet, dealing with liquidity.
Absolutely. That seemed to be the top priority. They walked through some pretty major financial moves.
Yeah, tell us about that. The debt exchange, right?
Exactly. That was the centerpiece.
Yeah.
They exchanged about $71 million principal of their existing convertible notes, the ones due in 2026.
Okay.
Swapped those out for brand new 9.5% convertible senior notes that aren't due until 2029.
Pushing it way out.
Way out. And that wasn't all. They also had a separate deal.
Oh, yeah.
With two affiliated note holders. They agreed to convert another $10 million of those same 2026 notes directly into equity.
Into stock.
Into stock, yeah. And that's supposed to happen by September this year, 2025.
Okay, so what's the upshot of all that maneuvering?
Well, the combined impact is pretty huge for their near-term situation. It slashes the amount outstanding on those 2026 notes way down.
How far down?
To only about $17 million.
Wow, from over 80 total before.
Yeah, and getting it below a certain threshold was critical because it means they avoid a mandatory $20 million prepayment they would have owed on their term loan.
Ah, okay. That prepayment was due soon, wasn't it?
By November 1st this year. And missing that payment could have triggered, the whole term loan becoming due immediately, a disaster scenario.
Right. So this whole exchange and conversion thing, it basically dodged that bullet.
Completely. If you look at the near-term debt they were facing, something like $118 million coming due relatively soon.
Now it's just that $17 million on the 2026 notes.
Exactly. Over $100 million in near-term obligations just gone. Pushed out to 2029 for the bulk of it.
That's significant breathing room.
Huge. They specifically said it removed a major overhang that was making it tough to raise capital.
Makes sense. Did they mention their ATM facility?
They did. They have an active at-the-market facility. Capacity is up to $150 million. Gives them flexibility, though they haven't used it much lately.
But even with the debt fix, it sounds like the cash crunch isn't totally over.
Oh, definitely not. They were very clear. Now that the debt exchange is done, they are actively looking for more capital. Need it to fund operations, specifically to get them through the potential approval and, crucially, the launch of Plam.
Their lead drug candidate.
Their lead candidate. And they mentioned they're talking partnerships, trying to find non-dilutive funding sources, too.
Right. Selling stock via the ATM dilutes existing shareholders.
Yeah.
Partnerships don't necessarily.
Exactly. And tied to this need for cash is, predictably, cost control.
Tightening the belt.
You got it.
Yeah.
They said they've taken meaningful steps to cut expenses, but trying to do it while still funding the absolute key priorities.
Which led to some tough decisions, it sounds like. Pausing programs.
Yeah, that was a big part of the strategy discussion. They've explicitly suspended or paused certain activities, certain pipeline programs.
To save cash.
To save cash and funnel what they do have towards getting ready for that Plam launch, building the commercial setup.
And finishing essential ongoing clinical trials.
Right.
For patients already enrolled.
Exactly. Specifically mentioning Zoltenebart trials that are already running with patients.
Got it. What were the operating expenses in Q1 then?
OpEx was $35 million, actually slightly down from Q4.
Okay. And interest expense?
$3.7 million. That was up a bit, partly because of a non-cash accounting thing related to their Omidria royalty deal. Less of an adjustment this quarter.
Ah, Omidria. What were the royalties from that in Q1?
Came in at $6.7 million. That's down from $10.1 million in Q4.
And just to remind folks, they sold off the U.S. rights for a period, right?
Correct. Sold through 2031. But they still have the rights outside the U.S., and the U.S. rights come back to them after 2031.
Okay. And looking ahead to Q2, what's the guidance?
They expect overall operating expenses to be lower than Q1.
Directly because of pausing those programs.
Directly because of that. Interest and other income, pretty small, maybe $625,000. Interest expense, though, that'll be higher, around $7.6 million, reflecting the cost of that new 2029 debt. That's excluding any non-cash stuff.
Okay, so the financial picture is they bought time, but cash is still really tight, forcing hard choices.
That sums it up pretty well.
Which brings us squarely to the pipeline. Where are they actually spending the money they do have?
Right. And the call made it crystal clear. It's pretty much laser focused on two main programs right now.
And number one with a bullet is Plam.
Plam. In TTPMA, yes, that's the big near-term bet, the absolute priority.
And the big news there, the FDA accepted the resubmission.
Yes, huge news for them. FDA accepted the resubmitted BLA, the Biologics License Application.
And set a date?
Set a date. Target action date, the PDUFA date, is September 25th, 2025.
Circle that one on the calendar.
Definitely. That's the key catalyst everyone's watching.
And the data supporting it, they touched on that.
They did. They highlighted the primary analysis, hazard ratio of 0.32. And the p-value was, tiny, less than 0.00001.
It's memes.
In simple terms, it means patients on Plam had a statistically significant threefold better survival rate compared to the control group.
Threefold better survival. Wow.
Yeah, really strong data. And they said all the sensitivity analyses back this up strongly, too. Consistent results.
Okay. And the market size for TTPMA?
They described it as potentially a nearly $1 billion annual market. Significant unmet need.
And Plam would be the first approved drug.
Expected to be, yes. First approved treatment specifically for TTPMA. They also mentioned, kind of interestingly, that they helped establish specific diagnostic codes, ICD-10 codes for TTPMA.
Why does that matter?
They think it creates reimbursement hurdles for doctors trying to use other drugs off-label, so being the only approved therapy could be a real advantage there.
Got it. Positioned as a go-to drug for transplant specialists.
Exactly. A cornerstone asset, they called it, with maybe potential down the line to expand the label to other transplant issues.
How ready are they for launch, assuming approval in September?
They talked about that. Said they have a small but very focused commercial team basically ready to go.
Targeting the big centers.
Yeah, targeting the top transplant centers that handle most of the patients, these fast start accounts. Really trying to understand who makes the decisions, identify the key doctors, the transplant champions inside those centers.
And talking to payers.
Yeah.
Insurance companies.
Definitely. Set engagement has really picked up since the BLA was resubmitted. They're doing product info exchanges. The feeling is payers see the value because there's just nothing else approved for these really sick patients.
Yeah, tell me more about the patients. What's TTPMA like?
Sounds horrific, honestly. They describe patients as extremely sick. The condition is unpredictable, progresses incredibly fast, often fatal in just days or weeks.
And no other effective treatments.
No other proven therapy that works reliably, they emphasized. Off-label stuff doctors might try has really mixed results, plus potential safety issues of their own.
So the argument is the survival benefit Plam showed is worth the cost.
That's the economic value proposition, yes. The cost of not treating effectively ICU stays, organ damage, death is so high that the drug survival benefit provides significant value.
Plus maybe outpatient dosing.
Yeah, they mentioned that as another potential plus. Reduces hospital burden.
Are they looking at Europe too?
Yes, planning to submit the MAA, the European application, later this quarter.
Okay. Now, one thing tied to the cost cutting. They stopped the compassionate use program.
Right, the Expanded Access Program, or EAP. They suspended new enrollment in that. Necessary, they said, to cut the direct costs of providing the drug for free.
But patients already on it.
They committed to supporting patients currently being treated under the EAP, and an ongoing pediatric study is also continuing.
Good. And getting the data published.
Yep, said they've submitted manuscripts to journals, trying to get that strong clinical data out there.
Okay, so Plam is priority 1. What's priority 2?
That would be Zoltenebart. This is their antibody targeting MASC-3.
Another complement pathway target.
Right, and the initial focus is PNH, paroxysmal nocturnal hemoglobinuria.
Which is a big market itself, right?
Huge. Estimated to grow over $10 billion globally by 2032.
So what's happening with Zoltenebart trials?
Okay, so the ongoing trials, one in treatment-naive PNH patients, an extension study, and also a phase 2 in C3G, another kidney disease, those are all continuing.
There's a but, isn't there?
There's a big but. The phase 3 PNH program, that's been temporarily paused.
Paused, why?
capital, explicitly tied it to capital constraints and the big spending ramp-up needed for large phase 3 trials.
So another casualty of the cash situation.
Seems so. They said they're trying to minimize disruption so they can restart it quickly once they get more funding.
They still sound positive on the drug itself, though.
Oh, yeah. They highlighted its differentiated profile, think it could be preferred based on efficacy, safety, maybe a low treatment burden dosing, potentially only 4 to 6 times a year, infrequent IV.
Okay, so Neuroplam and Zoltenebart are the priorities, with Zoltenebart Phase 3 currently on hold. What about everything else in the pipeline?
Mostly dialed back. Spending on ONS 1029, their next-gen MASC2 inhibitor, that's very limited. It's phase 2 ready, but basically waiting for cash and deciding on the best indication.
Other complement program.
Reduced spending there, too. Small molecule programs targeting MASC23, it's all about focus.
Anything moving forward actively besides Neuroplam and the ongoing Zoltenebart bits?
Yeah. Well, there's the MS527 program. That's the PD7 inhibitor for cocaine use disorder.
Right, but that's funded differently.
Exactly. Funded entirely by a NID grant, National Institute on Drug Abuse, so it doesn't tap into Romeos' own cash. That inpatient trial is ongoing, data expected late 2025 or maybe early 2026.
Okay. And oncology.
And CODOX. Still early stages there. Limited preclinical work is continuing, and the IND-enabling studies the ones you need before human trials are ongoing. Late indication is AML, acute myeloid leukemia.
Any promising signs there?
They highlighted preclinical data showing it worked better than standard of care in models and potential for broad use across AML types. They think it could be in the clinic in maybe 18 to 24 months.
And potential partnership value even early.
Yeah, they mentioned positive feedback from potential partners suggesting it could bring in value even at this preclinical stage.
Okay, let's try to pull this all together. If you're looking at Romeos right now, what are the absolute key takeaways from this call?
Number 1, the debt restructuring was huge, absolutely critical. Bought them time, fixed a near-term crisis, removed that major overhang.
Number 2, they still desperately need more cash.
Yes, very explicitly stated. The program pauses, especially Zoltenebart Phase 3, really drive that home. Fundraising is a top priority right now.
Which leads to takeaway 3. It's all about Neuroplam.
Pretty much. The whole strategy right now hinges on getting Neuroplam approved in September and launching it successfully. That's seen as the key to unlocking revenue, partnerships, and the funding needed for everything else.
So value drivers are that near-term Neuroplam PDUFA event, big market, strong data, launch prep, then longer term, Zoltenebart if funded, and maybe ANCA talks down the road.
Exactly. And the signal from pausing Zoltenebart Phase 3 is powerful. It shows just how tight cash is and how severely they're having to prioritize. Everything non-essential for the Neuroplan launch or already funded, like MS527, is basically on hold.
All right. Now, before we get to our final thoughts, we have to do our usual disclaimer.
Absolutely. The segment coming up now is purely for informational, maybe entertainment purposes. It is absolutely not financial advice. Do not trade based on this.
Okay, with that very clear, let's talk about a slightly outrageous but maybe plausible way to think about this, like a trade idea.
Okay, so here's the thinking. Romeo successfully navigated the immediate debt cliff, all right? They bought runway, arguably clear sailing until maybe those 2029 notes become an issue way down the line.
Right.
And the call made it obvious. Everything right now is riding on that September 25th PDUFA date for Neuroplam. The whole near-term story is compressed into that one binary event.
So the play focuses just on that single day.
Kind of, yeah. The idea would be to play the volatility around that date, maybe go long volatility using options.
Like a straddle or a strangle.
Exactly, something like that, using options that expire shortly after September 25th. The outrageous part is believing that all the near-term value fluctuation is tied just to this one FDA decision.
And the plausible part?
The plausible part is, well, the debt fix did give them the runway to reach this specific date. And the clinical data they presented is genuinely compelling for a condition this severe with no approved treatments. So there's a real chance of a big reaction either up or down based on the FDA's decision.
So you're not betting on approval or rejection necessarily, but just on a big move either way.
Precisely. It's a bet that the market will react strongly one way or the other to that news, creating volatility. The fact they had to pause other promising stuff like Zoltenebart just underlines how concentrated the risk and potential reward are on this single Neuroplam event right now.
If the data holds up and the market buys the story, big upside potential in that volatility. If not,
Big downside potential, too. It highlights the asymmetry and the binary nature of where the company sits right now.
Fascinating thought exercise, but again, just an idea for discussion, not advice.
Absolutely. Just analysis based on the call.
Okay, so wrapping up our deep dive here, key points.
Yeah.
Romeo's managed a crucial debt restructuring, buying vital time. They're cutting costs hard and focusing almost all available resources on the potential narrow Plam launch for TTPMA.
Check. Big market, strong data claim. PDFA date, September 25th.
But other pipeline programs, like Zoltenebart's Phase 3, are paused due to the ongoing need for more capital, which they are actively seeking.
Check.
And one more time, everything we've discussed is based solely on the information from the Romeo's Q1 2025 earnings call. It is not financial advice.
Not financial advice.
So the final thought maybe to leave you with is this. The debt restructuring was key. The narrow Plam data looks good on paper, but that need for cash is real and pressing. How quickly can a potential narrow Plam launch actually turn into revenue and maybe partnerships to fuel the rest of their ambitions?
And what happens if that launch hits bumps? What's the value then with so much riding on this one asset right now?
Questions for you to consider as you digest all this.
Definitely something to think about.
That concludes our deep dive into the Romeos Corporation Q1 2025 earnings call. Hope this helps you get a quick skip to speed on the key developments.